The idea is today to talk about real estate tokenization. I think this topic is already quite well known. It's out there, I think, since 1.5 years when all these tokenization projects started, for example, in Germany, but also elsewhere. And since then, a lot happened. Multiple companies joined this space. And I think it's interesting to see that in this case, that's what we are talking today of, that the company RTX21 from Frankfurt is now also joining this space, but with a little bit different approach. RTX21 or RTX21 is not focusing on the fundraising part, it's more on the tokenization part of existing real estate object. That's the key difference here. And that's what we would like to talk about today. We have therefore a couple of speakers here. Ekaterina from RTX21, Henrik Gebbing from Finoa, and so on. And therefore, let's quickly present ourselves. So therefore, I would like to quickly present myself. My name is Philipp Sandner. I'm working at the Frankfurt School of Finance. We have recently also gotten RTX21 as partner. It needs to be added on the slide here because it's still a new event happening. And we are also doing consulting topics, education, of course, conferences and so on. And I think in the academic space, we are, yeah, I can say we are number one because there is not that much happening outside us in Germany with this breadth. But I think it's a growing space. Okay, then the next person I would like to present is Ekaterina. Maybe you directly hand or you present yourself, Kati, to quickly present you and the perspective you're having.
Sure, no problem. Thank you. Good morning, everyone. So my name is Ekaterina Bozoukova. I have roughly 10 years of professional experience after I studied General and International Management at EBS and Rotterdam School of Management. In 2010, I then started my career at Deutsche Bank in Frankfurt, where I worked on different mergers and acquisitions, as well as equity capital market transactions for large cap corporates. It could be capital increases, IPOs, or normal buy and sell side mandates. After roughly 4 years, I then quit to found my first company, which was a healthy system gastronomy business. As an example, we took a pret-a-manger and wanted to do this in Germany. And after 4 years, I then founded my second company, Womeyer, Women in Real Estate, which is a real estate investment brokerage boutique. And roughly 2 years ago, I then joined RTX21 as Chief of Operations. RTX21 stands for the Real Estate Token Exchange of the 21st Century. So what we do is we offer tokenization as a service for owners, which means the owner remains the owner and we take the whole process for him of tokenizing his asset and then place the whole thing to investors. We take real estate as a first step that is existing. In a second step, there also will be project developments, and it has to be real estate from roughly 10 million euro onwards in entity value. Can be residential, can be any kind of commercial real estate. And we target as a first step institutional investors, but in the long term aim to also onboard private clients to make it available to anyone. The difference to other market participants in this area is that we offer variable interest for the investors, which means we don't have like a fixed tenure of, let's say, 5 years and you have 3, 4, 5% of interest, but you get really the variable interest that is directly pegged to the performance of the underlying real estate. Jan, maybe you can move to the second slide. To the opinion on tokenization. So we really do think tokenization is the future of real estate investments. And why? Because it's not only safe and efficient and fast, but it's also cheaper. So it has a lot of advantages that the market now needs to understand. And it's very easy to do once you have been onboarded on the platform. It revolutionizes the fractional trading of ownership. Right now, it's not the real ownership in terms of equity, but it's the ownership in terms of economic equity. So the profit of the real estate. And in the end, it's a democratization of the whole real estate realm because it makes it available to anyone independent of the financial background. Because right now, if you want to participate in commercial real estate, you would need to finance really large sums. And with our platform, you can actually onboard yourself with 500 euros and then start trading and do your own portfolio on an asset by asset basis. And then also in the secondary market, once there is a regulated secondary market, trade this real estate on the platform directly. So far about me and RTX21.
Perfect. Who's next? Who wants to present himself next? Gregor Evenkamp, unfortunately, cannot participate. He has sent his colleague because he had a very, very important appointment this Monday morning. So therefore, I asked the colleague from Clifford Chance, one of the largest, yeah, you can say this, one of the largest and best law firms in Germany, to present quickly himself and also his perspectives on real estate tokenization.
Yes, thank you very much, Philipp. My name is Christian Hissnauer. I'm a lawyer at Clifford Chance since 2014. I usually work in the Frankfurt office here. Also worked for some time in 2019 in our London office. And I'm advising usually on banks and financial institutions, including startup and fintech companies on all aspects of financial regulatory laws, including, of course, crypto assets. Just a few words about me and Clifford Chance. Clifford Chance, as Philipp outlined, is an international law firm. We have about 32 offices across 5 continents, and in Germany we are based in Munich, Düsseldorf, and Frankfurt. And our area of expertise includes the traditional areas like finance, capital markets, real estate, tax, corporate, antitrust, and litigation. And besides that, we have set up a global fintech and tech group with the aim of helping the increasing amount of clients interested in the tech and fintech sector. And in this group, we combine expertise from various different legal topics, experts on the data protection side, regulatory experts, capital markets experts, corporate experts, with the aim on helping the client to present to him a fully set of advice on all important aspects of fintech laws. My personal advice in this area usually includes the licensing, application procedures with BaFin, and helping clients who want to address the German market, who have German investors coming to their platforms, to help them through the German legal regulatory regime and helping them establishing the presence on the ground here in Germany. I also work regularly with Gregor Evenkamp, who unfortunately cannot attend today, on ICOs and tokenization of assets, not only real estate assets, but also various other things. And yeah, I'm a managing legal associate on our global fintech group.
Perfect.
My opinion, sorry, Philipp?
No, that's fine.
My opinion on tokenization is really, and Ekaterina outlined that very well, that it really offers a more shorter and quicker settlement, cost efficiency, etc. So it's a matter of fact that these service is really increasing and getting more and more market attention. My personal opinion and my experience from advising clients is that clients really look at a reliable regulatory framework. So in my view, the more robust the legal framework is, the more tokenization products will emerge. And if we look at the European level, where we have the European Commission, which has picked up this in the recent years, and also intends to harmonize more and more the area of crypto assets, my view is it's just a matter of time when tokenization is gaining at least 50% of the markets for ICOs and the issuing of regulated products. Thank you very much.
Yeah, Clifford Chance is doing quite some projects in this field. Actually, as far as I know, they also have advised the first crypto fund, like a fund investing in cryptocurrencies a couple of years ago, the first crypto fund of Europe. And therefore, I think there is quite some expertise with regard to matching law and crypto assets. Okay, next we have Marcel Kuhs from AZHOS, and he should also please present himself and especially his views on the aspects of real estate tokenization.
Yes, thank you, Philipp. Good morning, everyone. So as Philipp said, my name is Marcel Kuhs. I am now the strategical advisor for AZHOS and a co-founder of AZHOS AG. We're basically from the chemical industry. My background is more in developing, mostly Java. Could call it Java evangelist if you want. I am a studied audio engineer, and in the Bitcoin mining segment since 2013, when we started mining in Essen and Bochum. I also founded a company called Seedback in 2014, where we did decentralized digital out-of-home marketing, which was actually the first platform in this sector based on Ethereum smart contracts and on the Ethereum blockchain. Then I joined the chemical industry on Orbit Logistics AG, which is a specialist in process automation for the chemical industry. I became partner of Team McAfee and the head of special interest group in the Enterprise Ethereum Alliance for the chemical industry. Now, this is certainly not about chemical industry today, but because of the fact that I am watching this on a development from a developer perspective, it is highly interesting to talk about tokenization and the advantages of it when we are in the real estate sector. Maybe you could switch to the next slide, because I would say, and I try to keep this short, I'm not a big believer in the tokenization of everything within the next 4 years. I think the market needs a lot of education, but still, due to its strong advantages, I think tokenization will surely replace the traditional market infrastructure in the long term. And the most exciting aspect of tokenization, in my opinion, is the fractional ownership it offers to users, which is very important when we talk about real estate tokenization.
Great, thank you very much. And then finally, we have Henrik Gebbing here from Finoa. That's a company doing custody services plus the required licenses. But also, again, Henrik, I think it's better if you present yourself quickly and also your perspective on real estate tokenization.
Yes, sure. So yes, my name is Henrik Gebbing. After studying in Germany, the US, and Spain, I made my way into the consulting industry, worked with McKinsey & Company in the German office, consulting both high-tech and financial industry clients across the globe. And in the beginning of 2018, founded or co-founded Finoa, which is a digital asset custody and additional services provider based in Berlin. And since the beginning of 2020, the whole operations is under the preliminary license approval of the German regulator BaFin for the crypto asset custody. We are now expanding the product portfolio from custody only into additional services which span from very crypto specific or blockchain specific services like staking, but also into the secondary market, which is the trading and the brokerage of the assets under custody. And our play in the tokenization is that we help tokenization platforms, issuers, after the issuance of tokenized products. So we help the investors into the token, or the platforms who facilitate the investments into tokens with the wallet and custody infrastructure, and do that with through the whole span of crypto assets, be it cryptocurrencies from the almost now traditional crypto world to tokenized assets, be it real estate, bond structures, etc. And if you go on the next page, Jan, I think we've seen a lot of views about what tokenization can bring. Actually, we conducted a study with our partner CashLink just a couple of weeks ago, where we looked at the actual production and efficiency side. And for this specific case study that we did, we saw that the life cycle cost savings of a tokenized issuance goes up to 40% across the asset life cycle. So there are significant cost savings based on the technology and the chances that technology brings to the financial market. And without going much further into the details here, I want to give it back to Philipp.
Yeah, that's nice. Actually, I don't know this study yet. Maybe you can post a link in the WhatsApp group, because I think there is
Certainly, yeah.
interesting points.
It's actually not published yet, so this is a preview, but we are working on it.
Okay, perfect. Sorry for forcing you to push this.
I'll get back to it.
Yeah, perfect. Okay, yeah. So let's then directly start. I think we have a very, very interesting panel. We have the operations of the real estate company in here. That's Kati. We have people who have done tokenization projects, blockchain projects since years. For example, Marcel. We have law here, Clifford, Christian, and also we have the custody here, which is key because without custody you cannot do tokenization at all. I think that's a very interesting round, and therefore maybe let's directly start into the topic. What are we talking about when we talk about tokenization of real estate? What is exactly tokenized here? Is it a security or is it a fund? So what exactly is tokenized when, for example, with RTX21, you're tokenizing real estate? What exactly is tokenized here? Maybe, Kati, would you like to take this question first? And then maybe also Christian from Clifford and Chance can add some details.
Yes, I would suggest that Christian can go into the detail why it's not a fund, why is it a security, etc. But firstly, you cannot generalize what it is because every company has its own approach to tokenization. So I can only speak to how we approach tokenization. So right now it's not, in Germany at least, legally possible to tokenize the real equity behind it. So the owner of the real estate still remains in the land register throughout the whole process. What we do is we take the profit that each real estate makes and then fractionize it into tokens, and the investor, when he buys a security token, behind this security token is the security, which is some kind of debenture that represents a fractional part of this profit. It means in the end, the aim is that the investor becomes some kind of owner of the real estate without having to deal with the tedious things like asset management, reporting, etc. So he's very flexible in choosing which real estate he will invest in. That depends on his market views. For example, if he believes in residential, then he can create his portfolio based on residential real estate assets. If he wants to turn to logistics, he can sell it on the platform with his token, and then he receives the profits from his logistics assets. And that's the good thing, that he's very flexible. So legally, it's a normal security that underlies the normal security regulation, and it is some kind of debenture that offers a flexible interest rate.
Okay. Before we start with more legal details, maybe Kati, you can also emphasize what is RTX21 doing differently in comparison to other companies we already know in the real estate tokenization space, for example, Exporo, Fundament, Brickblock, and so on. What is different? As far as I know, it's basically primarily the crowdfunding aspect, which you are not focusing on, but please elaborate a little bit more on this question.
Yeah, sure, no problem. So there are various competitors of ours who over the time have also changed their concepts a bit. Some have moved to providing only IT solutions for funds. Some have moved in tokenization for all kinds of assets. Some do only real estate in the residential area, and they're also only project development. So it's very different what people offer. There is also one company that buys real estate and then does it in a kind of fund and places the tokens of this fund to its investors. So what we do is we never buy the real estate ourselves. So RTX is never the owner. We offer the infrastructure for tokenization on our platform for the various owners. And so that's one difference. We are not the owner. The second difference is most of the tokenization players offer fixed interest rates on their products. So you know exactly for a time frame of, let's say, 3 years, 4 years, you get 3, 4, 5% of interest, and then you receive your nominal amount you invested back, and you had the interest in between. So that's different with RTX. What we do is you are like a real estate owner because you receive what the real estate actually performs. So you get a fractional part of its profit, And that's, I think, a big difference. The other difference is that from our perspective, it's very important that you focus on one asset class, because if you do tokenization and then place this to investors, you are very dependent on your network and the experience you have in this sector. And for me, I don't think it's possible that you can have the experience and network for all the asset classes there are, for art, for cars, for whatever asset you can tokenize. And therefore we focus exclusively on real estate, and also not in a fund, but really on an asset by asset basis. What can the owner use this for? On the one hand, of course, he can use this to normally sell real estate to the public and also to an untapped investor universe for him before. On the other hand, he can also use it for a closed sale, which means I have 3 to 4 parties that I would normally use as co-equity investors, and then I don't do it on a normal way, but do it through tokenization. So it can also be a closed investor universe. And the last use case here is if you have family offices that have very, very difficult ownership structures, you can help them through smart contract programming to make it very easy how to deal with this ownership. Who can do what, when exactly, who has what rights. That's very easy with blockchain technology. Maybe.
Okay, that sounds good. So you are not raising money to then purchase one real estate object. You're rather providing a standard which can be applied to existing real estate objects in the form of tokenization of the profit share, profit participating rights, not a fund. And therefore you would like ideally to tokenize like multiple, like 10, 20, 50, maybe 100 real estate objects, not one fund. That's basically how I understood it. Maybe Christian, you could provide maybe a little bit more details here. What is exactly tokenized here, and how maybe are the differences between tokenizing equity, which is not possible, tokenizing profits, or tokenizing a fund with multiple objects inside.
Yeah, thank you very much, Philipp. And I think Ekaterina already mentioned the important parts when you talk about tokenization. And this is really, first of all, every tokenization is different, and you have to be aware what type of asset you're actually tokenizing and what, in the end, after the tokenization, that product will constitute under German regulatory laws. Now, we all know that Germany does not have a specific crypto asset regime or a blockchain regime like the Loi Pacte in France, for example, for ICOs, or a sandbox approach where people can try in a light regulatory environment to develop their product and to issue their product, like in the UK, for example. So in Germany, the qualification of crypto assets and the question whether it's a fund or whether it's a security or whether it's a financial instrument under the German Banking Act has to be assessed on a case-by-case basis, looking at the specific configuration of the crypto token. Now, we all know that BaFin, the German regulator, differentiates between basically 3 different classes. One is the payment token. We all know that the classical Bitcoins are an alternative means of payment, regulated as crypto asset or as a unit of account under the German Banking Act. Then we have the utility token, which is basically an access right or a voucher granting you access to a specific service or product. And then most importantly for our discussion here for the tokenization of real estate assets is the security token. And the security token basically entitles the holder to similar rights as a conventional security. So for example, you have either voting rights or dividend payments when we talk about a share similar product, or in our case here, like a bond holder, you have a repayment claim or an interest payment. And BaFin basically looks from a technological neutral approach. So notwithstanding whether we're using blockchain or DLT, BaFin matches that against existing regulatory frameworks, most importantly the German Securities Trading Act and the German Prospectus Act, to see whether actually the tokenization triggers follow duties. And we are typically, the security has different requirements to observe to qualify security. We have to be transferable, so the token needs to be assigned to another person, irrespective of whether certificates exist that registered the document. The token has to be negotiable on the capital markets, but negotiability on the platform is sufficient, so we don't need to have this listed on the German stock exchange. An MTF would suffice. And no securitization is necessary. It's sufficient that the holder of the token and the rights embodied in that token can be documented, which is typically the case by using DLT-based technology. So the main difference basically between a traditional security and a security token is that the issuance and the ownership of the security is established and confirmed via a DLT technology. So, and Ekaterina mentioned it already in terms of RTX 21, we're talking about a traditional security. That means the issuance of such security in the first place has to follow the German prospectus regulation and the German Prospectus Act, meaning that if you want to place the token or offer the token to the public, you have to have a prospectus in place which you can present to the investors. Now, the most white papers, of course, at least the ones I have seen, are not sufficient. You really have to follow the German law in this regard. And another important aspect is when we talk about brokerage activities and secondary trading activities. So if you want to establish a platform afterwards where the investors can trade the token, then requirements under the German Banking Act need to be observed, because a security is always a financial instrument under the German Banking Act. That means if you want to set up a platform which helps you to, or which helps investors to trade the product on the platform, if you want to intermediate between investors and the issuer, so any brokerage activities, that typically requires a banking license under the German Banking Act, meaning that you have to establish a physical presence in Germany, you have to apply for a license with BaFin, and certain organizational requirements have to be observed. So it's really, if you have the same product, same rules approach, which the German regulator and the German environment here follows. And just to add on the fund side, Ekaterina mentioned it as well. That's also very important to consider. Typically, a fund is defined as a collective investment undertaking, which raises capitals from a number of investors with a view to investing it in accordance with a defined policy for the benefit of those investors. And looking at the guidance from the regulator and also from our experience in the market, typically what is important here for a collective investment undertaking is that the investors need to participate at the profit and loss of the vehicle. That is, for example, not the case if you guarantee to buy back the token at a later price, which is of course not lower than the issuer price, because then you don't have this participation and the profit or loss. That again triggers another regulatory implication which needs to be observed, and that is you might enter into taking deposits, because you have a guarantee to pay back the investor a certain amount of money which is not lower than the one he invested. And that can be avoided if you give him a qualified subordination, or if the investor agrees to a qualified subordination, because that would exclude the deposit taking activity. Other important point on the fund space is that we are not talking about a fund if there is a general commercial or industrial purpose outside the financial sector. And talking about real estate, that is typically, according to BaFin, the case if the underlying project is really the development of real estate projects or the operation of a real estate. So for example, if you have a hotel, you tokenize a hotel, and the operation of the hotel, the profits you gain from the operation of the hotel are distributed to the investors. Important is that the per case sale of real estate, that is not considered as operational outside the financial sector. Should we have a fund in the end, it is important to bear in mind that then the authorization by BaFin as a fund manager is required, which also triggers certain organizational requirements, etc. So just to summarize, it's really a matter of fact. You have to make sure that you understand the regulatory consequences which are triggered by your underlying product.
And we see here very nicely that it's not an easy topic. It's technically complex with multiple conditions, but then even in a high regulation country, well, that's funny to say with Wirecard, but even in a want to be high regulation country, it's possible to do tokenization, but it's not easy. Therefore, it's good to have like good advice here. But maybe let's turn towards the primary market and the secondary market. Christian, you already mentioned it, but maybe let's turn with this question towards Henrik. What exactly is happening currently on the primary market? What's possible already? What is not possible? And how is the primary market and the secondary market developing, for example, in the area of real estate?
Yeah, absolutely. So I think we've heard already that on the primary market, on the issuance side, a lot is possible. I think technologically, we all agree everything is possible, but the big question is what fits into the regulatory framework of each jurisdiction, and in this case, Germany. On the secondary market side, we have seen over the last 2 years a very vast and very quick development of one major, let's say, roadblock that has been custody ever since. And I think we've seen a lot of new market entries, and I would consider Finoa part of this, which have built stable, now regulated solutions, which bring a lot of trust and stability to the post-issuance side of tokenization use cases. And this is in general for real estate and not real estate. Where the secondary market is still developing, and I think this is, we will touch this in this discussion anyhow, is the secondary market trading side. We do know that the, let's say, traditional players which provide liquidity through exchanges, be it the Deutsche Börse, Stuttgarter Börse, they are entering into the space and developing solutions both for traditional crypto assets like Bitcoin, but also for tokenized assets or digital securities. Yet, I think this has been one of the major remaining roadblocks for mass adoption and volume increase, that the tradability and the liquidity in the tokenized security space has just been rather small. So once you invested on the primary side, you didn't have the real chance to liquidize quickly. And this is always a problem to convince the investor. But what we've seen is tremendous development, and a lot of players which have tackled this very problem. And I think for 2020 still, we will see significant liquidity increase on the trading side of digital securities in a European framework. If it's Germany, or rather maybe some let's say secondary jurisdictions, maybe Liechtenstein, Luxembourg, whatsoever, we will see, but I see a lot of development on that end.
Okay, so and you're doing the custody for such projects, so you are seeing quite some demand from various projects, probably not just real estate tokenization. Of course, without custody, you cannot do the primary market. You can also not do the secondary market. But maybe you could also elaborate a little bit on the question: what kind of dynamics do you see on the start of this entire token life cycle, starting with custody? That's, for example, a project where you are working on, or where inquiries are coming to you.
Yeah, absolutely. I think demand, yes, it's absolutely and very quickly increasing. And one major point was obviously the introduction of the crypto asset custody license in Germany. A lot of players who have been working on both the issuance side or already dealing with crypto assets in general, they have been in the market for a couple of years. Now suddenly, very quickly actually, this license has been put in place. So a lot of players have to now figure out, do they want to go for their own license? Do they want to work with license providers? Do they only want to focus on the technology? So you see very much the market split in two business models on the custody side. One is pure technology providers who help licensed institutions, be it traditional financial players or new fintechs who go for the crypto custody license with the technology. And then you have players like we are, Finoa, who bring the technology, but also come with their own regulatory framework and their own license, and serve either the customer directly in a direct-to-consumer setup, or by helping platforms like RTX21 to serve the end consumer and the end investor into a tokenized product with a regulated and secure custody infrastructure in the back. And I think this has been one of the major developments, that The market has really, first of all, solved the technological problem, now has the regulatory backing. And this really has changed the overall mindset, because if we would have had this conversation a year ago, I think most of us would have still thought, okay, everything that considers a token is insecure and I might lose my token and be hacked and whatsoever, the cybersecurity risks. And I think the major problems have been solved. And now it's more about interconnecting both the issuer side through platforms and the secondary market. And as I said earlier, then connecting the liquidity part. And we really see now how this becomes a real ecosystem that starts getting more and more competitive to a traditional setup, with the cost savings involved that I mentioned earlier in the study that we've conducted, where we actually on the post-issuance side see up to 50% cost savings towards, for example, traditional depository setups with traditional securities.
Okay, perfect. I would now like to turn to one point which you have mentioned, and also one point which came up in the WhatsApp chat, that was basically the repayment of capital gains. I think this question is perfectly answered by Marcel, who worked a lot in the area of the digital programmable euro, as we now term it, and this topic is apparently also on the rise. So therefore, Marcel, ideally, you would like to have the repayment of capital gains in euro, but ideally also on chain, right? Because otherwise you have to basically on-ramp and off-ramp cash all the time. So how would ideally should the world look like in terms of repayment of capital gains? What's your opinion on this?
So this is now a question on potential on tokenized euro, I guess you want to talk about, or?
Okay.
Yeah, well, right now we're in a stage where capital gains are sold or paid out in token, right? Ethereum or Bitcoin, maybe some stable coins which are linked to the value of a fiat currency. But the topic of tokenized fiat currencies, like I'm not talking about a token that represents a value of a currency like euro or US dollar, is highly on the rise, and there are many startups right now that are working on it. So from a future perspective, it is highly likely, and it makes more sense, of course, if capital gains could be paid out with real currencies on blockchain, like CBDC, like central bank digital currencies. Some of you might heard about it, that the central banks are working on tokenizing the fiat currencies as well, which gives them, of course, a few advantages. And for the retail sector, or I call it client sector as well, since the settlement is way easier, and well, you have programmable money, which is a good thing if you want to follow the flow of the money and don't want to have this long accountings that you are having today. So you could easily reduce the time of a transaction from a few days to minutes, which is, of course, in a 24/7 market, which is another advantage of tokenization, is very makes sense. Let's keep it like that.
Okay, perfect. Okay, then let's turn again towards the object of real estates which are being tokenized. So maybe, Kati, are you also collaborating with exchanges, or do you plan to do so? Because only once you have tokenized something on the primary market, then you allow people to trade and transfer their assets once you are collaborating with an exchange. Or do you have other plans such that people can sell and trade their tokens?
Well, first of all, the mere trading of security tokens as such is possible today. It's just not on a regulated exchange, but peer-to-peer from one wallet to the other. So if you and I meet on the street and we would like to buy and sell our tokens, that absolutely is possible today. We are in talks with different exchanges, and we always say you don't have to reinvent the wheel. Just from a regulatory perspective, it's not possible to be a bank, to be an exchange, and to offer the platform services that we do. So for the user, which is the investor on the platform, it will not be visible that they are connected partners in the back end of the platform. But in the end, of course, we will not become an exchange ourselves, but will use APIs to connect to, let's say, Börse Stuttgart or Deutsche Börse, depending on who offers the solution that best fits what we need as RTX. I guess to add to what Henrik said, we also see a lot of movement in the interest and in the demand of security tokens as such. What everyone, every market participant, not only RTX, but also banks, custody providers, exchanges need to do is to educate the market on this, because people sometimes still don't know the difference between cryptocurrencies and blockchain technology. So you really have to start from the basis, how you account for security tokens, and to get rid of this investment fear, because fear is nothing else than false evidence appearing real, and we have to make this false evidence to a true evidence. How is it structured? Is your money safe? Is your money technically safe, etc.? That's what we're working on. And the exchange, the personal discussions with the security token exchanges that are being done are critical to this development.
Okay, perfect. And can people invest as much as a couple of €100? That's, I think you said this previously. Who are you targeting at? Are you targeting primarily institutional investors? Are you targeting primarily retail investors? Are you targeting German investors or investors from elsewhere? Maybe you could also elaborate a little bit more on this question.
Yeah, sure, happy to. First of all, it's very difficult, like Christian said, to generalize the regulatory setup that you have. So, of course, our approach that we don't buy the real estate, but only offer tokenization as a service, provides us with the option to scale very quickly, because in the end, what matters is the amount of assets you have on platform. Therefore, our aim is to have as many assets as possible, as quickly as possible on the platform, to offer a lot of choice to investors. Once you have the German regulation, of course, you can relatively easily passport to other European countries. To internationalize it, of course, you would need further legal structuring on how to place this product there. In terms of who we are targeting, we have a two-step approach. We start with institutional investors that normally invest rather large sums into real estate. But as a second step, we also aim at targeting retail investors. They are a little bit more difficult, let's call it that way, from a regulatory perspective, because you need also more licenses and more paperwork from Clifford. But of course, that's also an aim. In the end, institutionals are the parties that move large amounts, but retail investors are the ones that have a lot of prints, so they trade more than institutional investors. Okay, perfect. And how is law and the technology, basically, how is this interacting with each other? How are you referencing the token from the side of the contract, and how is basically the other way around? How is the smart contract integrated with the law? Maybe Marcel, or could you answer this question, or who would be best to answer this question? It's a very interesting question about the integration of law and the technology.
I think legal is a topic for Christian rather than me.
Yeah, I'm happy to take this forward. I mean, as a regulatory lawyer, I can always say that from the pure regulatory standpoint, we have a technological neutral approach. Well, at least the BaFin has a technological neutral approach, as also most European regulators. That means, notwithstanding that you have a product which is based on a blockchain, notwithstanding that whether you use a smart contract, the BaFin looks, how is this product configured? Is this similar to a security? Is this similar to a financial instrument? And then uses the existing legal framework to that product. So it's really, when we talk about licensing requirements, when we talk about prospectus requirements, it's really not so much the fact that we're using technology, which drives the regulation. It is, in Germany, the fact that you have, in the end, a security or a regulated product, which gives you the relevant guidance. And of course, smart contract and the use of smart contract is perfectly possible. And from the civil law perspective, at least from our experience, there are no real obstacles in doing that, as long as it also depends on the choice of law, of course, whether we are into German law or a lot of clients like to use English law. That needs to be observed then as well. But when starting the tokenization projects, when talking about the underlying assets, it is really important to bear in mind that the use of technology, the use of DLT technology, is not relevant for the regulatory classification, at least at the moment.
Okay, perfect. And what about the custody? Maybe, Henrik, another question to you at Finoa. How do you think is the future working? Is it such that custody solutions from the technical perspective are embedded in companies like RTX21? Or are you in the future servicing your product, including the required license, towards RTX21? You know what I mean? So depending on the license, are you simply supplying the technology, or are you supplying the technology plus the license? Where will the market turn to in the future, or does it depend on the company you are collaborating with?
Yeah, I think it's the latter. It's very much the company you are collaborating with, and that's what I tried to illustrate a little bit in the beginning when I said the market is going into two different business models. You see on the custody side, the pure technology players, which are mainly focusing, for example, on financial institutions who already own, for example, a full banking license and now see crypto as a new opportunity and then extend their license model towards crypto asset custody, for example. And there you see the technology side. Then you have players which are like Finoa, which come with the technology, but also have the regulatory framework, because, and I can only speak out of our own experience, to comply with the regulatory organizational requirements, to then be eligible to hold the license comes with a lot of organizational effort, resources, and with that also obviously financial resources. And it's just, what I don't see is that each player which will deal with crypto in the future will have an embedded license, for example, to do so and to handle the assets. So what I see is that they will partner with licensed institutions, just very much as you see it also in the traditional system. You see those umbrella licenses very much, where fintechs then are able to use partners with financial institutions and use the license that institution holds to conduct their own business. And I think the same thing you will see as well in the crypto market. That being said, I think custody per se will play a major role, much more of a major role than it played in the traditional world. I think a lot of people, when you ask them how's custody working in the traditional system, they won't really have an answer. Probably 4 years ago, I didn't have an answer myself, and still I understood how the financial system is working. But the question about securitizing, or like protecting a digital asset which is only code-based and has a lot of cybersecurity risk, is a very different business model to, let's say, a still physically represented asset that, for example, in a global certificate, you have to literally physically put into a vault to protect. And the business model around that, the technology around that, plays a complete different role in crypto, and custody is literally the security and the fundament to then build additional services on top. And that's what you currently see, that this unfolds in different business models and in different go-to markets. And I think there's space for both directions, pure technology plus technology with the license.
Okay, thank you. I think we are in the final phase of this panel discussion. One of the last questions now comes from a guy in the WhatsApp chat with an US number. So in the US, it's now, I think, 2 o'clock in the morning, 3 o'clock in the morning. So this guy stayed up the entire night for participating. Let's honor him with posing the question he posed. The question is, how is the underwriting and the due diligence assured if you're purely a tokenization platform and not the owner? I think, Kati, that's the perfect question for you. How are you due diligencing the projects? How are you assuring the quality to really see that the quality you are, that the object you are tokenizing is actually there, the quality is high, and so on. So how are you assuring this, especially when you're focusing on the tokenization as a service business model?
Yeah, sure. So every asset on the platform has its own due diligence section. For every investor who has been KYC'd and he clicks on this project, he can then see various documents on this specific real estate, which includes the prospectus in the future. It includes the business plan and kind of an expose on the real estate, but also a valuation report from a renowned market player, so not like a small company that nobody knows, but Jones Lang LaSalle, CBRE, really good valuation report, so that people not only see pictures and an expose, but really the business plan from the asset manager and an external third-party valuation report to make up his own mind on whether he thinks it's a good investment or not. So of course, RTX is not liable for the information that is placed there, but as our clients have real estate from 10 million euro onwards, it's totally normal and their everyday business that they have updated due diligence documents on the assets, be it commercial due diligence, technical due diligence, legal due diligence, everything can be downloaded and checked by the investors on platform.
Okay. I think that's a good answer. Next question we have also coming from the chat. How is the ownership rights and the economic rights bound to the token such that basically you cannot break the rights and the token? I think that's a key question which is always popping up with regards to tokenization. How is this going hand in hand such that basically the paper contracts cannot be broken apart from the token itself? I think that's a very, very deep dive question for a lawyer. Christian, would you like to answer this? How to basically put technical tokens and the law in synchrony?
Yeah, happy to do that, Philipp. Or at least try it. Yeah, I mean as outlined at the beginning of one of my answers is the difference really between a security token and a traditional token is that for a security token, the issuance and the ownership of the security is established and confirmed via DLT. So you usually do not have a specific certificate or which is in your hands, which you can then use and which documents basically your ownership of the paper. Now that is all done on the DLT and via DLT and blockchain technology, but it is insured in the end, because if it would not be insured, we would end up in not having a security, and the whole transfer of security tokens would not work on the German civil law aspect. So that is a key part in the end, which requires great attention to details and great attention to the setup of the specific tokenized product, that this is insured and does not split apart, so that in the end you end up in a situation where you have a transferred asset, but on the blockchain technology still someone else is documented. But as far as I see it in the market, that works very well and hasn't come up as an issue so far, at least in my practice.
Yeah, but probably there is a threat in the future that you, with some amazing lawyers, you could kind of create a break here and then create some issues in the future with the right angle. I think it's at least a threat right now, even though it hasn't happened yet, right?
Well, it is a threat, that of course, Philipp. But I also see that it is at the attention of the German legislator, or also the European legislator, which are looking at creating digital securities and a digital framework. The interesting part, so they are targeting the issue of digitalization of securities, also from the civil law aspect, not only from the regulatory aspect. So these things will be considered, in my view, in the future. Of course, there are always some creative aspects which try to put the finger into various aspects to show that products are not sufficient from a civil law perspective. But as always, when new technology, new products come onto the market, it's always a matter of time till the legislation catches up, and I would say, having seen the proposal for digital securities by the German legislator, it is something which is considered. But I agree, of course, there's always a threat that things are getting split apart, as there was a threat, for example, in the past that cryptographic keys can be stolen, which has now been dealt by the crypto custody license. So agree with you, threat at the moment. But I think in the future we will see harmonized regulation.
Okay, a good answer. And I think now this is one of the truly last questions coming from, again, one guy in the chat. The question is, I think that's going to you, Kati. Is the real estate industry really ready for this? Why would the real estate industry do this? Are they really interested in this technical solution, like democratizing ownership, reducing handling fees, and so on? Because the guy said, he's called Alpesh, he says that the industry is primarily interested in raising money, refinancing assets, and providing secure returns for investors, but not necessarily driving the innovation forwards, maybe also engaging in risky innovative projects and so on. So is the real estate industry ready for this and pushing this?
Well, my answer to this is that all three aspects that he said the real estate industry aims at can also be fulfilled through tokenization. So let's say in the 80s or 90s, nobody thought that the internet would be such a change in how we work nowadays. In the end, we don't change how real estate works. We just make it easier, quicker, and cheaper. So it's a question back, why not do it? Why not take these advantages that the blockchain technology offers and use this innovation? From my perspective, it's not riskier at all. And the aims that real estate asset managers have to do these new things that have been mentioned can absolutely be fulfilled. Maybe to mention one further thing, for us, it's very important in the beginning that the asset manager and owner of the real estate remains invested in this real estate by roughly 15 to 20%, so that the interests of the investors and the owner are always aligned.
Okay, and are you talking, if you talk about real estate investors, you're talking about the retail investors or the institutional investors? So what is the target market again?
It's valid for both, but right now I'm more talking about institutional investors.
Okay, perfectly fine. Okay, sounds good. But of course, you, Kati, and your team, you are starting in this field. You have already first real estate objects in the pipeline, right? But only if there is a standard emerging, then apparently the company and also the market share will grow. This assumption is also right?
Correct, absolutely. I mean, we have 230 trillion US dollar of global real estate value. Therefore, I think there's a lot of room for still traditional approaches and also the innovative ones.
Perfect. Excellent. I think that's that was a perfect, nice summary word by Kati. Would anybody here in the round say something as a closing remark, or something where we missed something, maybe something which needs to be detailed? Perfect. Okay, then let's close this round. Thank you very much. I think it was a very interesting question. Good to have people from multiple domains here, technology, law, business, and so on, covering multiple aspects. Thank you very much, Jan, for the invitation to us all. And I think it was a very, very good start in this week with an interesting Monday morning. Thank you very much.